Hello and welcome to the Rain Trader. It's a very hot Sunday evening here in the UK, and I'm currently doing my trading plan for next week. And one of the first things I look for is to see what economic reports will be coming out next week that might affect the currency pairs I'll be trading. Now, one of the first places I go to check is a website called Forex Factory. Now, Forex Factory is a free website that you can log on and you can see what news reports are coming out during the following week and what currencies they'll be affecting. I mean, Forex Factory doesn't just do that, actually. I mean, it does various other things, but that's primarily why it's for. For example, it's got forums here. You've got suggestions for trades. Here's the news page. If you're dealing with fundamentals for Forex, then this is a place to go to. You've got the market, which gives you a detailed analysis of various currency pairs. And then you've got a list of brokers if you're looking for broker. It's got a list of all the different types of brokers. But what I do is I look at the calendar and it will give me a list of economic reports that will be coming out. And it tells me what currencies, the times they're coming out, and how they'll impact the currencies. So you go onto the filter here. For example, you've got expected impact. And as you can see, I've ticked the red and the orange because the red is high impact. That means it's really going to affect the currency. It's going to create a lot of volatility with that currency. And then you've got the medium, which I've also ticked. I'm not so worried about the low impact and certainly not the non-economic data. But then I'm also looking at, under here, you've got event types. So, for example, you've got growth, inflation, employment, central bank bonds, miscellaneous, speeches, business surveys, consumer surveys, and housing. I've just left them all ticked, to be honest, to keep them as they are. Now, here on the currencies, yet again, most of them I've left ticked. I want to hear from not so much the New Zealand dollar, I don't trade that, or the CNY, that's Chinese yuan. I don't trade that. So you click back on here, that clears that, and then you go over to here, and obviously this is Sunday, May 12th, the current time here as I'm recording this. We got on to Monday, May 13th. Here's the currency, THF, this is the Swiss franc. Now 5:45 p.m, that's in my time. So you can set your own time zone. So for example, it's currently 8:05 p.m. here on Sunday evening. Click on that, and you can click on there, and you can bring up whatever country you're in and the time zone. So it will tell you the time. You've got AM, PM as well, and format, and it will tell you the time when the reports are coming out in your time zone. So for me, that one there's 5:45 p.m. tomorrow. But the one I'm really looking at is here. Look, 7 a.m. This is the British pound, and I trade the British pound a lot, especially the pound against US dollar, the cable. And as you can see, it's red, so it's really going to highly impact the British pound. Now over here, you've had the previous. Now this is a claimant count change, so this is how many people are now claiming unemployment benefit. Okay. So we look here, 10.9 thousand previous, forecast 13.9. Now what we do here is click on the folder. It brings up a lot of information, it brings up histories of past reports. It tells you the source. So here it's Office for National Statistics, and it's a change in number of people claiming unemployment related benefits during the previous month. So obviously if it's actual, so actual less than the forecast, not as many people claim it, obviously that's good for the currency because it's lower unemployment. Okay. And it's released monthly about 16 days after the month ends. It says there, first indication of the employment situation. So this is all relatively straightforward. Important one here, look, this is why traders care. Because although it's generally viewed as a lagging indicator, the number of employment people is an important signal of overall economic health because consumer spending is highly correlated with labour market conditions. I mean, that's fairly obvious, the more people in work, the more consumer spending there is. Okay, so unemployment is also a major consideration for those altering the currency's monetary policy. So as you can see, it's highly going to affect the pound. Okay, so any currency that you're trading with the pound, you've got to be aware of that report, and that comes out at 7 a.m, which is the open the European market. London opens at 8. Now, I don't normally trade news events. I mean, these are fundamentals rather than price action, and it can be very much a gamble. And I'll show you later why. So it's not advisable. So if, for example, that, let's have a look here. So Europe opens at 7. That's when the report comes out. London opens at 8. I'd probably leave it at least an hour until after London opens, just to see it settle down. And I'll be looking at the chart, because you'd probably see a big spike depending what the actual what the actual figure was, compared to the forecast. And as you can see here, look, we've got US dollar. It's red again, and obviously the pound against US dollar is a very popular currency pair. It's what I trade a lot of as well. So that's going to be highly affected. Yet again, you've got the forecast previous. You can click on the folders, and it will bring you up. It explains all here, what it is. Actual grade in the forecast is good for the currency. So it gives you all the information you need here. So you don't need to be, an economic. Get my teeth in. You don't need to be an economist to understand it all. It's fairly straightforward, and it's got the different days here, the times they come out, and these times will be in your time zone once you've set your time up here. And it does it right through to the whole of the week. And then, as I say, you've got these amber ones: US dollar, Philly Fed Manufacturing Index. Click on the folder, and it will tell you release monthly on the third Thursday of the current month. Actual going forward, good for the currency. So, for example, if it's medium impact, it's the volatility when it whatever happens, it's not going to be highly affected as obviously the red ones, which highly impacted. And obviously you've got Australian dollar in there, but most of these are affecting US dollar, which is obviously the main currency, and you got Japan in there as well, but most of them are US dollar and the British pound. Now I'll show you why you shouldn't be trading news events. So if I show you this, so this is the chart of the pound against US dollar, and this is the hourly chart. So each of these candlesticks is an hour. Now here, this big spike here, this was on Friday 3rd of May. This is the first Friday of every month. The non-farm payrolls comes out of America, and it's a report saying how many people are currently employed in the United States. Now, this is, as I say, this is pound against the US dollar, and when it came out, it wasn't exactly what the forecasters were predicting. It wasn't as good as what they were hoping. So as you can see, the pound absolutely shot up, and this is just in 1 hour. You see it reached the peak there on the wick. It's about 80 pips just in that hour alone. And sometimes, the pound US maybe do like 100 for the whole day, and that was just in that hour alone. So if you've already got a trade open and you're on the wrong side of it, then at least you've got a wide enough stop, because obviously it did go all the way up there, but then it's come back down again. It's come back down again, and it's sort of sat in this range here. And then you see it's come all the way down. So after coming down from there, this was on Friday, okay, so it's managed to stay up to the weekend, up to about here, but then the following week it's just gone down. But you probably wouldn't have kept it over the weekend anyway. But the point is, if you were sort of trading, because I do remember when the report was going to come out, and I heard a lot of forecasters saying it was going to be good for the US dollar, and a lot of forecasters were wrong, some were right, but it's very much a gamble, so I would steer well clear of it. So as I say, the reason why I actually check for the following week is so I know when to trade and when not to trade my particular currencies, and if I have any open, obviously adjust my stops so I'm not going to get caught out. So now I'm looking ahead on my trading plan for the following week, and certainly on Monday morning now I know that at 7 o'clock, obviously stay clear of the cable, because there's going to be some big movement there, and I'm not necessarily going to be able to know how to predict it, am I? I mean, yes, I could use all the indicators that are on offer. I could maybe listen to the forecasters, but some forecasters will have one view on it, others will have another view on it. So for me, the reason I look to see when these reports are coming out, not to trade them, I know some traders will trade them, but for me I think it's too much of a gamble. So I do it to make sure I'm not trading when that high volatility is around. I'd rather stay clear of it and wait for it to settle down. So that's my view, but certainly use Forex Factory, because it's a really good free resource. I know some brokers, for example, I use IG, and they do have an economic calendar as well. But Forex Factory is very good, and I know a lot of traders do use it, and it's very comprehensive. So always have a look at that, so you stay, one step ahead of the game, and you're trading safely. And that's what I'm doing at the moment, just to make sure that I have a good, successful trading week coming up. Okay, I'll see you soon. Cheers. Bye bye.